Welcome! You're viewing the video version of the Pirls Stock Market Commentary featuring the proprietary bull-bear point and figure market breadth summary chart for June 12th, 2016. Market breadth. With this past week's market fractional decline, our bull-bear point and figure ratio remains unchanged at 1.60, retaining its previous bullish territory. The total count of securities in bullish or bearish patterns increased 4% to 2,928. The count of bearish stocks increased 4%, while the count of stocks in bullish patterns also increased 4%. The Pirls P&F Market Breadth Summary Chart shows us a market now 3 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. Those who wish to receive the Pirls Stock Market Commentary free of charge via email on a weekly basis may simply enter their email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 138 points for the 13th advance in 17 weeks. At a positive 353.28 points, it has risen above the March 2015 and June 2014 highs, and continues below the 3 remaining highs above plus 100, and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 2 distribution days. Accumulation days are counted when the index closes up one higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum, now at 25.40. The CCI 20 daily fell from 100.20 last week. At Tuesday 5/31 close, it had 6 days above zero for a change in Woody's trend to long, and is now within the plus or minus 50 range for a valid zero-line reject long entry signal should the CCI 20 daily rise next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 6 weeks ago, while the daily CCI 20 began a Woody's uptrend 1 week ago. Having begun a Woody's uptrend 5 weeks ago, the CCI 20 weekly fell to 89.95 below and plus 100 for a trade exit signal from 105.94 last week after the zero-line reject pivot at a positive 15.23 within the plus or minus 50 range 5 weeks ago. We will exit this trade simulation at Monday 6/13 open and report the results in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: precious metals and oil services on top, banking and brokers on the bottom. Tech mixed. Bullish, disk drives continues in the top 5. Bearish, KBW Bank and Comp Tech continue in the bottom 5. Brokers has entered and leads the top 5. S&P Retail has entered the bottom 5. Gold and silver leads the top 5. Semis has left the top 5. Oil has left the bottom 5. Oil services has left the bottom 5 and entered the top 5. Focus this week from Roger Barris at www.actingman.com. What could possibly go wrong? Some highlights of the article are as follows. The Wall Street Journal and Bloomberg View have just run articles on the shadow banking system in China. This has put me in a nostalgic mood. About 35 years ago, when I was living in Japan, I made a side trip to Hong Kong. I took the hydrofoil to Macau one afternoon and the same service back early the next morning. On the morning trip, I am sure that I saw many of the same faces that I saw the day before. They had been gambling all night and were now heading back, blurry-eyed and hungover, to their desks in Hong Kong's financial district. My fellow travelers now sit atop the world's second biggest economy and a steaming pile of debt. What could possibly go wrong? Lord, make me financially prudent, but not yet. The Wall Street Journal article is the more detailed one. It describes the market for wealth management products, which is ominously and accurately close to the acronym for weapons of mass destruction. These are products sold to Chinese investors. Remember the boat back from Macau by Chinese banks. Monthly WMP issuance. Some observers were worried about this 3 or 4 years ago already. In the meantime, the WMP business has ballooned to an incredible size. I said that no one much cares what is in the WMP. This is because, despite warning labels that the WMP are not guaranteed, many investors think that the issuing bank, and therefore ultimately the government, is on the hook for repayment. The fact that the biggest growth is coming from small and medium-sized banks is indirect confirmation of this. I mean, it's not like some salesman at a small bank with a monthly quota and a mortgage would be winking and nodding with Mr. and Mrs. Joe Lee or Tom Wong, would it? Nah, that kind of stuff never happens. What WMPs are buying, note the percentages invested in bonds in, quote, non-standard credit assets, end quote. The bonds consist mainly corporate bonds in which a jaw-dropping issuance boom has taken place as well. With interest rates trending down for quite some time now, Chinese companies have eagerly loaded up on debt, often in order to finance interest payments on existing debt. Corporate debt is in fact growing like weeds all over the world, driven by the same central bank policy-induced mindless demand that drove the mortgage credit bubble in the last iteration of the long boom. The problem is that the credit quality of many of the assets WMPs are buying is rather dubious, to put it mildly. Conclusion. So we have a booming market in opaque, complicated financial instruments involving layers of risk, leverage, and maturity mismatches. We have unsophisticated investors and issuers, both seeking to avoid government regulations and expecting to be bailed out in the worst case. We have cross-holdings and backdoor exposures to regular credit channels. We have all of this taking place in an environment of booming credit expansion, a deteriorating economy, and financial repression. I hate to repeat myself, but really, what could possibly go wrong? Now, it could focus on Bitcoins and Vancouver real estate along with the WMP or their sponsors. This would close the loop on the bilateral trade. We have had all the nice, cheap Chinese manufactured goods for which we have given them pretty pieces of green paper. Now we take the pretty green paper back. Bitcoin has lately soared again. Rumor has it that Chinese investors have rediscovered their yen for BTC, so to speak. Thank you for viewing this week's Pirls Stock Market Commentary. featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and restorative weekend, that you're looking forward to a prosperous and productive week coming up, and wishing you true success.